Welcome to this video. Just going to cover some price action and a trade from yesterday, Monday. From the previous video done, I think it was like Friday or Saturday, said this could be the next target. Why would we target this liquidity and this liquidity? Because we swept this liquidity right on the edge of the higher time frame swing low, so this may would make sense to be the new higher low that's going to put in the higher high. So that means the highs are weak and they may start to get taken. However, looking at price action with London Open, I did say on the video, I wouldn't be trading for places like here. This is just, price is bullish and a majority of people is going to be selling from here and probably use this liquidity to run this. However, I did think when we're looking at the 15-minute, we might take this liquidity here, react to something in here, get a pullback on the 15-minute, come into something, down here, and then take the highs using the liquidity from people shorting to run the highs. But yeah, price action just continued to be bullish. But yeah, that was what I was thinking. I was going to write it on the community wall, and I thought I don't want to, in case someone ends up then selling there, because I say there may be a pullback happening because of this overextended price action. We may pull back into something, but before going long, that's how price likes to move. It expands, pulls back, expands, pull back, expands. So, but yeah, let's go down to the medium time frames. So with this in mind, though, you can say like, okay, I'm going to start to target any liquidity, so I'm going to go long, and if we pull back into something, you're not going to want to short away down into here. You want to take quick profits, 1 to 3 or something, with the overall picture knowing that price is extremely bullish. We've had an internal market shift again, and then this lines with a major structure that is bullish, so everything's pointing to be going for longs. And then is that for what? Yeah. So this is for a 4-hour POI. I just went short for it because of the higher time frame story. However, we do sweep liquidity here and we cause a break of structure here. But what this could be used for is if you pull back, break this, then what caused that break you could then trade from. So medium time frames. So we have broken out of this. Let's just get rid of that. So what is standing out? I was using a split screen and I was actually on the call to one of my friends teaching him how to trade. So sweeps liquidity here. And break of structure. And just, very similar trades that I've taken already that I've trade recap also December and November. This sweeps liquidity, causes a break of structure, and we have liquidity to take. And the 4-hour that was here, this was the last sell to buy, it's engulfed, and that was what caused the POI to fail. So then we're just going to try and target our 1 to 5, because with this scenario here, if you get a 1 minute here, this is showing that this may be getting attacked because it's weak. And obviously following the higher time frame story, it makes sense to be in longs. I would need price to start shorting. You could get one like this as a market shift, and then if you broke this structure. However, I'd probably want a second one just because of the way price is, to confirm that would be starting to be bearish. But let's go to the 1 minute. 1 minute was pretty clean. But this is all the rules met here. Liquidity sweep, break of structure, and within this most recent leg, it is well priced. And sorry, one of the most important things, liquidity to take on entry. So this candle pulls back, it's going to be our last point of supply. Hopefully we get the interaction that we want. this could be your market shift also, because this is a candle it pulls back. Change this for its prominent. But the reason I'm doing this last point of supply here, because we've got the interaction here, it's showing that buyers, you know, maybe coming into the market from this POI, this wick, it sweeps liquidity, nice bullish candle. So I was looking at it like this, and we have, you know, just going to forget all this price action just now. A low, lower high, lower low, we break structure here, and then the lower high gets taken. So then now what we've got to look at, we've got a 70% chance that the order flow is going to continue of a low, a high, we're going to pull back, we're going to try and catch a higher low to put in a new higher high, because now it's shown that supply is not in control. Supply has failed here and the high has went, so we may be getting bullish price action. And why would I be using this? Because this is where liquidity got swept, and liquidity to take on entry. Really important to have the liquidity to take on entry. We don't want to be the ones getting swept. But this is why I'd be using this, because we've swept the liquidity here, and this gives us liquidity to take on entry. Does that? See, there's no liquidity sweep there, and then if you did use this, unless liquidity was generated before the POI, then that, you know, it make it valid to trade from here. But as this price action is looking as right now, we'd want to trade from the edge of the leg. 4 pips. So there's no liquidity generated here anyway, so yeah, 1 to 5. Of course, we are targeting this week high, so we feel price is going to come up, start to put in higher highs, higher lows to take this liquidity. It's a pretty quick one. The high gets taken, and I was also, so I was on a Zoom with my friend, but I'm not jumping into that now, but there was another trade outside my hours that I was monitoring, but I didn't enter it. But yeah, it was a nice, if you look at price action, it you know, it comes down like this, it sweeps the buyers out here before the true move goes. That's always how I like to see it, and the reason you could see it, I had a split screen of the 15-minute 1M, and you see price coming down, then it starts to go sideways, slowing down, and we get a nice impulsive move out. It gets respected, so we have now a low, a high, a low, we break structure here, so 70% chance that we're going to make a new higher low to then put in the new higher high after sweeping out liquidity, you know, so it made sense, but didn't meet my, you know, it was outside my hours, so I didn't trade. But let me actually just play forward. You can see how clean it is. You see here how price action, we're bearish, now we're slowing down, going sideways. We've got a nice impulse out of here that gets respected. Wi-Fi's playing games. So low, high, low, high. It's going to come back into this range here, and then you'd want to long from here. and this was a, you know, you target just a week high again. But yeah, price was off from there. Got respected. See, just putting in lows, highs, lows, highs, lows, just continuing. But let's look at. That's the new high has been put in on the higher time frame. So we've broken structure here now. So today's session, you know, not saying me well, but after a break of structure, if the 15 minutes starts to show a market shift and breaks of structure, we may be pulling back on the 4 hour into discount of the leg, and then we could start to then trying to catch the higher time frame, higher low again, to then trade to keep turning bullish. So we can anticipate maybe a pullback, you know, today or tomorrow session, or London, New York, we'll see. It's very clean on the daily. Yeah, the low, high, low, and now we've put in the new high. So as we can see, we broke structure here. We got a pullback, you know, but tried to put in the new high, created liquidity to take, failed here. Everyone's going to be shorting here, and price just flowing through to put in the new overall higher time frame, higher high. So yeah, see what today's session brings on the medium time frames, see if we'll get a pullback. But yeah, hope you enjoyed the video. Catch you in another one.